Dyer Blair, and we're going to be looking at matters private wealth and succession and estate planning, anything around that, including trusts. So we'll be interviewing one of the key personnel here at Dyer Blair. She's the head of private wealth department here at Dyer Blair, and I'm excited to get to this. Her name is Nirmal Pattni. So Nirmal, welcome very much to this episode. We are delighted to have you. We are also very, very grateful to have you on our on this show, to have us enlightened, us and also the clients on private wealth and on matters investments. So to get us started, could you please briefly introduce yourself and introduce the history of the company, and especially with relation to evolution of private wealth? Yeah.
Yeah, sure. So I'm Nirmal, as you know. I have the private wealth team at Dyer Blair. I've been here for about 9 to 10 years now. Joining the company to basically build private wealth management for them, the department. The company at Dyer Blair is basically it's quite a household name in the market here. We have been in the market since 1954. We're the founding members of the stock exchange here in Nairobi, in Uganda, and in Rwanda. So when you're out there in the market, you mention the company, most people kind of know it. So what the company does is we have a number of departments within the company. The company started off as a stock brokerage house, which is buying and selling of shares.
Yes.
And over the years, the corporate finance team has taken a very good stance within the company. And the corporate finance team deals with all matters to do with raising capital. So some of the IPOs which have gone through the country have gone through Dyer Blair. Like one of the big ones is the Safaricom IPO. We were the transaction advisors there. Then we have our dealing teams, which is the equity dealing team. We have a fixed income dealing team. We have a strong research team, which basically does research on listed companies which are listed on the stock exchange here. And then we have the private wealth management team, which is the one I head up. And on our desk, we basically look after high net worth individuals of the business by providing them with investment advice across all asset classes. All asset classes meaning cash, fixed income, equities, commodities, real estate, private equity.
Okay, that is very good. It's interesting to know that Dyer Blair it's quite a household name, and for you to have taken part in some of the big transactions that almost everyone knows about, well, that is a big step. Now, when we look at private wealth, which is the department that you had, how do you define high net worth individuals? Does age have anything to do with it?
Not necessarily. So on our team, we have a bit of a threshold, right? And the threshold is you need to have investable assets of 5 million shillings plus. And it's just to kind of put a sort of a stop, because there's so many clients.
Yes.
And the desk is not that big, so how many clients can you actually manage? So it goes from your 5 million shillings all the way up to your billions.
I see. So age has nothing to do with it.
No, age has nothing to do with it. It's purely based on assets under management. So the amount of money you have invested with us.
Oh, I see. So how does then Dyer Blair incorporate real estate into the broader private wealth strategy for the individuals you handle?
Yeah, so I think it kind of all depends on the investment objective of the client, the risk profile, where they're at in life, what do they want out of their investment portfolio? Do they want a level of income? Do they already have real estate in their portfolio, perhaps through some inheritance, some land sitting somewhere which is perhaps not doing anything? So it all kind of depends on that. And based on all that information that the client gives us, we then provide our clients with the advice. Whether they should invest in real estate or not. It also depends on, where are they in the country? Are they not? Do they want to invest in Kenya? Do they want to invest outside Kenya?
Okay, I see. So are there any notable trends then in real estate, that are influencing how then you would advise a client? For example, if a client would want to actually have some investments in real estate, which they don't already have. So are there some real estate trends that would influence the kind of advice you would give to that specific client?
Yeah, so what we're seeing right now is very interesting. We have quite a mature client base. And a lot of our clients are actually moving away from holding direct investments in real estate, purely because operationally it's a bit of a headache for them. They have to manage the maintenance and they have to manage the tenants. And if you've got a portfolio of like 10, 20 apartments, perhaps it becomes a lot of work for you. So those clients, and what we're seeing is those clients are now moving away from holding real estate directly and trying to get exposure to real estate, but in an indirect way.
Okay. So in this indirect way, what are some of those indirect ways?
So some of the indirect ways are you can invest in real estate through perhaps a REIT,
yes,
a real estate investment trust, or you can invest in a fund which invests in real estate, right? Whereby you have no direct management, you have no operational duties. You've just invested your money and you let the professionals deal with the rest of it.
Well, I see. It would be interesting to know, now that you have actually handled these individuals, if what they would ordinarily want, which everyone wants, is not to have the headache of, for example, dealing with the tenants of your properties, dealing with service charge or anything, these kind of things that come along with you owning a property. But have you had instances where you have had individuals that deal with property managers, because they're actually there who actually take the hassle off the hands of the individual, so that then the individual does not deal with the tenants, does not deal with anything to do with that property, because anything maintenance, collection of rent, collection of service charge is handled by the property manager.
Yes, indeed. There are loads of management agencies out there. We are aware of them. They're out there. But again, I think that the crux comes to every client has such a different need, yes, and likes a particular management office, a company rather. Yes. So we kind of leave it to the client to deal with, to find what's optimal for them.
Okay. Well, that is good. So the last question with relation to private wealth and real estate would be, how do you tailor real estate strategies to align with clients' risk portfolio or their investment goals and legacy intentions?
Okay, so what we do initially is we basically assess the client, right? What sort of a risk profile is this client? Is it a risk-averse client, moderate, or the client has a bit of an appetite for taking a little bit of risk?
Yes.
And there's a series of questions and a dialogue we have with the clients to determine that.
Yes.
And then we advise them based on what they would want. So say you're risk averse, for example,
yes,
and you want a income generating asset class in real estate.
Yes.
So we would then say perhaps you can put your money towards a fund or a real estate investment trust,
yes,
which is a bit low risk because it's diversified and you have there's no direct holding, so you have no operational headaches.
Yes.
And it's very low risk. For medium risk clients, we basically would recommend a direct holding, right? But with good grade A properties or residential and commercial.
Okay.
Now, take a client who has an appetite for a little bit extra risk. They can't. They have the appetite.
Yes.
And that's when we would perhaps recommend getting involved in development type of projects. So there are companies out there who basically raise money, get a group of people together, raise money to, put up a 20-story building out there. So they're not directly involved, but their capital is involved.
Yes.
So they get the development type of returns.
I see. So for these individuals that have quite a great appetite for risk, then they are the kind of individuals you would advise to invest in, for example, off-plan developments where they buy and then they wait for the construction?
Exactly.
Okay,
That's right.
I see. All right, okay. Now let's shift our gears from real estate and look at estate planning and trust structures for individuals.
Yeah.
So what role do trusts play in helping clients manage and protect real estate assets across generations?
Okay. So trust structures basically help a legacy continue
Yes.
for a family. It helps clients distribute their wealth in the way they want and how they want. It also maintains some level of control over the assets,
Yes.
as opposed to it being outside a trust where assets are just distributed. There's absolutely no control. It helps prevent disputes within families. And it also helps families mitigate the process of the probate. So if assets are in the trust, then the assets do not need to go through a probate process in the event of distribution. Yeah.
Okay, all right. So how do you then structure estate plans to ensure real estate continues to generate value while preserving control and also in a tax efficient way for the individual?
So the trust structure will have rules. Who the distribution should go to, how it should be distributed, when it should be distributed. So it's all basically governed by rules, which we help our clients put together. It's a bit of a dialogue that we have with our clients because they also, most times they don't know. Through the dialogue, they start thinking and then they start putting that together.
Yes.
And so then we work with the client and companies out here to put the whole structure together.
Oh, so what I hear is that Dyer Blair does not set up the trust by itself. How does that go? So
exactly, that's right. So we do not set the trust structure itself, but we help the client along through the process. And along the process, there's a lot of things for the client to decide on. How are they going to distribute the assets? When do they want to distribute? To whom do they want to distribute? What do they want to protect the assets from? Perhaps it's future generations. They don't want the assets to be used for gambling or alcohol or certain activities. We just help them through the entire thought process. So they can put the rules and make it as tight as possible.
Okay, all right. So, and assuming this client has properties across border, so we're dealing with properties here in Kenya, we deal with properties in Mauritius and other countries out there, maybe in the UK. How does your role change, or how is your role adjusted to suit the advice you would give such a client, given that you have to work with other companies to set up this structure? So at what point does your role start and at what point does your role stop, so that then the others, for example, the tax advisors can take over?
Sure. So what we do is clearly every jurisdiction, every country has its, it's governed by its own rules, and tax and taxes and the rest of it. So what we do is, because the client is ours and we're basically managing the relationship, we bring in the experts where and when required. So say a client's got a property in Mauritius, for example, we'll work with the legal experts out there to then give our client basically the knowledge and the advice that they need from Mauritius out here in Kenya. So we work with legal entities in all these different countries to then who will then help our client.
Oh, okay, I see. So, a question to that would be, who then takes on the risk? Because if you're getting other companies, other experts to come and help your client, meaning you're the core advisors. So who takes the risk? Who takes on the risk? The risk should anything happen? Because sometimes tax advisors will advise you something, and then for some reason things just.
Yeah, no, I totally get that. So what happens here is, when the advice is given, right? The advice is given from between the legal advisor in the other country to the client. So we are there to facilitate, but we're not there involved. Do you know what I mean? Because we're not the experts in the market there. We're experts in the market here.
Yeah.
We take the backseat there.
Okay,
Yes.
I see. Okay, that's pretty much understandable. Now, for a client that has over 500 million worth of investments, and which then is the initial qualification for them to be your client, how do you help such clients with their money and other long-term assets to effectively pass that on to their next generation and their beneficiaries? How does Dyer Blair come in that aspect?
Okay. So we sit down with our client and just have a very open conversation around, right, you have this amount of money, what else do you have? And we understand the plan, where are they in their life cycle?
Yes.
Right? And then ask them questions around what the objective of this portfolio is.
Okay.
Is it to make sure that the future generations will never go hungry?
All right.
Or will always have shelter? So it just depends on what the client's objectives are.
Yes.
And then based on that, we then provide advice on perhaps you should look at a trust structure or a company setting. And there's loads of things involved here, like who the beneficiaries are.
Yes.
Do you want to have named people or do you want to have groups of people? So for example, you can name your siblings, or you can name your grandchildren, or you could just leave it open because you don't know how many grandchildren perhaps you will have, or
Yes.
things like that. So then we, and depending on where the assets are, we work with experts to understand, okay, should you have it in a trust structure? Should you have it in a company?
Yes.
Who should be the directors of the company? And so, yeah, a series of those sort of questions.
Okay, that's interesting. So then again, what strategies do you use to manage and you educate the beneficiaries or the heirs to such a high net worth individual, especially if you're dealing with younger people or minors in terms of their responsibilities of wealth? Do you go a step further to look at people who are behind your client, who is the high net worth individual, to look at the heirs to him or her and the beneficiaries? Do you educate them?
Yes, indeed, and it's very important. So something we actually advise our clients a lot about is get the next generation involved, whether you have passed on wealth or not.
Yes.
So get your children involved with perhaps your assets or just understanding investments. So yeah, we do that. We run a series of programs.
Yes.
In fact, for minors, we had a very good program here at Dyer Blair, which is called the Legacy Program, whereby we got the minors in for a day,
Yes.
and we went through the entire spectrum of investments that are available, and it's very basic from what can a bank offer you to some complex investments. We did it in a very nice way, which was it was kind of gamified, so minors don't get too bored of it.
Yes.
But it really helps them. It basically opens their mind as to what is available out there. And we truly believe that if you don't understand an investment, you shouldn't do it, right? So we provide the education. At all levels.
Okay.
So it could be the beneficiaries, which are the minors. It would be the patriarch of the family. It could be the spouse.
Yes. So that is very good, because I don't think I know many companies that actually go a step further to educate the people who are going to be managing this wealth in place of the owner of the wealth. But the question then would be, these programs, are they client specific, or do you get a group of clients, like 5 of them, and then bring their heirs and their beneficiaries into this program and educate them, or how do you go about that?
So at the moment, we've been very much on an ad hoc basis, but I think in the future we would like to get groups of families together.
Yes.
And provide the advice, because it's a lot more efficient that way.
I think if I were to come to Dyer Blair, I definitely would be getting the value for my money. If I could have someone to educate the people who are going to be giving my wealth, then I think it gives some sort of peace to the individual, which then brings me to family dynamics.
Okay.
So in families where we have heirs that have vastly different financial behaviors, how do you manage expectations and ensure responsible stewardship of the assets being passed down?
Right. So again, sit down with the client. So it's very much a very relationship-driven business here.
Yes.
Whereby we really understand our client, understand what their long-term visions are for the family assets. We then go a step further and then help the client basically put together a investment policy statement.
Yes.
Right? And this basically governs the rules of the assets, right? How they should be invested, who should be responsible, and what period of time. For example, if you have a family of 6 siblings, everyone's a professional, they're all working.
Yes.
And one person is basically managing the assets in terms of instructions and all of that. Perhaps they can do it for a year and then somebody else takes over in this year 2, year 3. So we sit down with the client to basically put this whole IPS, which is the investment policy statement, together,
Yes.
which will help the family now manage the assets in a sort of professional setting.
I see. And because, again, family dynamics, no one family is like to any other family, and no one sibling is alike to any other sibling.
Sure.
Have you encountered situations where, for example, you have 6 siblings and say 5 or 4 of them are very disciplined in terms of management or wealth management or even money and investment, and then there's one who is just a bit, they're getting there, but it's a bit not at the pace at which the others are getting at age. So how have you handled such cases, or how do you handle such cases?
Yeah, so we go back to the, again, sitting down with the client, explaining, drawing the client back to what is the mission.
Yes.
And what is the objective of this family, these assets.
Yes.
So kind of bringing them back to, what are we actually doing here? And bringing them again in focus, spending time to explain what the portfolio is doing. And there's been times where, there's a bit of a conflict, but because it's stipulated very well in the investment policy statement, how conflict should be treated, it becomes very easy.
Oh, I see. So what I hear is that we have a very good understanding, a relationship with the client, and we have covered all areas that we think could be problematic. So that then when such instances arise, we have a document to refer to.
Exactly. And if you think about it, that's basically the whole aim of a trust, right? To protect, control, and manage these assets.
Yes.
And so you have to kind of look ahead and see what issues could come up perhaps in the future, and then how do you control that? How do you protect your assets?
Oh, interesting. In these times that we're living in, we have had issues where we have not issues per se, but there are families that are big. There are families that are even blended. So you're dealing with blended families. So how does your role change, or how do you improve it when it comes to dealing with individuals who have a big family, a blended family, and especially where there could be some emotions attached to it? Because when you're dealing with blended families, have their own dynamics. Does anything change? Does your look change when it comes to such instances?
No, at the end of the day, I think nothing changes here. At the end of the day, we are here for our client.
Yes.
We're here to help them manage their assets in the most professional manner, and to help them achieve what their objectives are.
Yes.
There could be clients where their objective is, look, I don't want to have double-digit returns. I do not. I want something very safe, single-digit returns, and I want something very simplified.
Yes.
We will help them get that. So at the end of the day, it all depends on what the client wants. Now that if the client wants us to now manage multiple families, we will do that, and we will provide the advice to whoever the client instructs us to do. So it's all very much governed by what the client wants, and because they're our client, we basically go and do that.
it would be interesting to understand if, for example, of course, your initial point of contact is the client that has come to look for advice from you, to seek advice from you people, and then they involve other people who are going to, say, manage their property or the area, so to speak. And at some point, you may find that you have different points of information, different points of instructions. How do you handle that?
So again, with that, we have very tight rules as to who gives instructions.
Okay.
So we could have perhaps a company, right? Where assets have been transferred into a company setting, and we've got the directors of the company. We know who all of them are. They're part of our account opening process. And then the company then appoints one person to give us instructions. We do not, we prefer rather to take instructions from just one appointed director, to avoid this conflict, because for example, one director could tell us to buy and the other tells us to sell. We're in a bit of a soup. So when we're dealing with our clients, when we are actually onboarding them as well, we put this out very clearly for them to now appoint a person, and that comes in the board resolution to say Mr. or Mrs. X will be giving instructions, and if they want to change that, that's possible too.
I see. It is it's good to have one clearly appointed person or point where you can get information, because all this can be very confusing, and at some point you find that it is you, the advisors, who are left in the middle. So, and you can't, it becomes quite a headache. Now, let me ask, because the kind of clients that you deal with are clearly high net worth, and after advising them and you having been in this market for quite a long time, what is the one thing that you could point out that you have noted being a difference between such clients that you handle and clients who are not maybe as high net worth as you know, going by the definition you've given, and people who are a bit lower in terms of when it comes to management of their wealth? Is there a difference?
I believe so, and the difference that we're offering here is very much of, we're giving you each client a bespoke solution.
Yes.
So the solution that I'm giving a client A to the solution I'm giving client B is very, very different. And that is the differentiating factor that we have on our desk. We take each individual client, we really try and understand who they are as a person, as a family, and basically tailor our solutions to meet those individual needs. And then we're there monitoring their portfolios, advising them on any changes that need to be made, and executing for them. So, you know, the journey they're going through in this whole wealth management space is very much tailored to that plan. And it can only be at scale. It's a little bit difficult to do, right? Because if you have so many clients, how many can you look after? Which is why, you know, they're segmented into high net worths.
Oh, I see. Okay, all right. Your clients, of course, have diversified their investments. So where does real estate stand in relation to alternative investments like private equity and hedge funds in your clients' portfolios? What is the place of real estate in that?
Yeah, so within a diversified portfolio, we do advise our clients to have a certain percentage of their assets invested in real estate. And again, it goes back to what is the risk profile of the client. Is it risk averse? Is it moderate? Is it a risk taker? And based on their profile, those percentages are then adjusted. And also the way in which the client gets exposure to real estate is adjusted. For example, if it's low risk, we would advise indirect investments, perhaps through a REIT. Again, if it's a risk taker, we'll say perhaps get involved in a off-plan development Yeah.
Oh, I see. Okay, all right. Let's look at, let's shift our gears to a global perspective and the legal considerations that will be there for your clients. So, for clients with properties across multiple jurisdictions, how do you address legal tax and regulatory challenges in their estate planning?
Yeah, so clearly our clients are, they live in multiple places. Some of them have complex tax, what do you call it?
Requirements, regime?
Exactly.
Yeah.
So what we do is, based on where they are, we then use the experts in the market there. Because us ourselves, we're not tax advisors. So even in Kenya, we would use the tax experts here.
Yes.
So perhaps if they've got property in the UK, they've got some property in the US, and we know that the tax the rules in the UK in the US are quite they're quite strict in terms of what is tax and what is not tax. We basically use the experts out there in the market.
Okay. So here at Dyer Blair, how would you say, or when would you say your role stops? For example, if I walk into your office and I have, of course, I meet the requirements to be admitted here as your client, then I give you initial instructions and you advise me on where to invest and where not to invest depending on my risk portfolio. Then where does your role as Nirmal, as the head of private wealth or as Dyer Blair company stop?
Okay, yeah, good question. So our role stops with what is invested through us and with us.
Yes.
So if you have investments which you made in Kenya through Dyer Blair, we are very much involved.
Yes.
If you invested in global markets through Dyer Blair, we're very much involved. But if you go and do something independently,
Yes.
then that's where we have no oversight over, we have no control over. Obviously, clients do come to us and ask us for our advice on other things that they do in the market, because we have now maintained a very good, solid relationship with our clients.
Yes.
And they really value our advice. So we will give our advice based on the limited information that we have, but that's just a gesture of goodwill.
Okay.
Yeah.
It's like a value add to that.
Just a value add, yeah, exactly.
Okay. All right. Let's see how the future looks like. So, how do you see the role of real estate evolving in private wealth management over the next 5 to 10 years?
I see people, yes, investing in real estate. However, I see them investing indirectly.
Okay.
A lot more of indirect investment through REITs. You can have your income REITs, you can have D-REITs. So as we see more of those coming about into the market here, we see a lot more clients changing the avenue in which they invest in real estate. So moving away from direct holdings to indirect.
All right, I see. So thank you so much. That has been pretty much enlightening and getting new information. So which I'm sure our clients will appreciate. What would be your parting shot for this? Having
what would be my
parting shots, like gaining your insight from what you have been doing for years and the clients who have been advising for years. What would you say to people who are planning, maybe hopefully one day, getting to a place where they can actually become your clients?
What I would advise individuals is start investing in whatever capacities that you have. Have a percentage of your portfolio in something which is fairly safe, giving you a level of income, and then put a small portion in something which perhaps you can take a little bit more risk.
Yes.
And that again depends on where you are in life.
Yes.
But if you're kind of starting off, I would really highly recommend that just start investing, and that could be as simply as investing in a bond, for example,
Yes.
In a government bond, which gives you a fixed coupon, which is interest paid to you twice a year, and then at maturity you get your funds, your invested amount back. And with the coupon, you can start investing in perhaps some equities to take a little bit more risk, but start investing. Do not delay it. And don't just keep your money in the bank.
Don't just keep your money in the bank. Thank you so much, Nirmal. Thank you for taking your time to do this with us. We're really grateful, and we look forward to this information changing the lives of some people or whoever will take it seriously. So thank you so much.
Yeah, thank you so much, Yvonne. Thanks for having us. And thanks for having Dyer Blair on board. We really do appreciate it. And hopefully we do a lot more together.
Hopefully. And you're welcome.
All right.